Good day, everyone. So, my name is Ayu Shafika binti NJ, metric number 2X6301. And here are my team members, which are Jimmy Kalum, Irwani Shafika, Nur Husna, Nurin Irina Jasmine, and lastly Iqbal Irfan. So we are team 5, and today we will have a discussion about our two case study, which are firstly and financial, the road to financial inclusion in China through QR codes and technology as a service, and our second case study, which is funding societies using fintech to support small businesses in Singapore.
Okay, let me start with question number one, which is while and financial had been successful in transforming China small merchants into the QR machine, how would the growth plan develops in the view of the new regulation? So, based on the case study ones, in my opinions, actually the key point for this question is enhancing technology as a service, which is TaaS. And financial may improve its standing with the new regulation by throwing its technological know-how to other banks. And financial can continue to be relevant and also grow in the financial ecosystem. All right. For examples, offering digitalization services. Basically, traditional banks and other financial institutions can be benefit from a financial full suite of digitalization services. This offering might consist of three factors, which is solution for cloud computing by providing safe and scalable cloud infrastructure that helps financial institutions update their processor. Number two, big data analytics, which is we supplying platforms that and tools that let banks examine accessible data sets to improve decision making. And the last one, which is something that not new for us as a student, which is artificial intelligence, using chatbots and automated producers. Oh, okay, to improve risk management and also customer service. I think maybe you have another opinions about this question. Do you?
Yes, that's a good one, Irani. So, in my opinion, one of the things that Ant Financial can do is also by expanding their services beyond payment solutions, which is by including loans, insurance, and wealth management. So, by offering these small businesses and individuals easy access to loans, can actually help them in managing their cash flow and help them to invest in growth opportunities. So, insurance products such as health insurance, life insurance, and poverty insurance can actually provide protection against unforeseen events in the future. And meanwhile, the wealth management services, including the financial planning, investment advice, and portfolio management, can help the customers to manage and grow their wealth. So, by offering a wider range of services, and financial can address more financial needs of their customers, and this will help to keep their customers loyalty to them because they can get everything they need easily from one place. And this diversification makes and financial a much more resilient business and valuable to their customer. So I think by taking these steps, and financial can navigate the challenges posed by the new regulations while still continuing to grow and support the small merchants in China. So what about you, Nurin?
I believe that with the mandate for all merchants to use a unified code for transactions, and financial may need to ensure seamless integration of this requirement into its existing QR code payment system. This could involve updating their technology infrastructure to comply with the new regulation. And as financial will need to invest in upgrading its existing QR code payment system to accommodate the unified code system. This may involve developing new software applications, updating backend infrastructure, and ensuring compatibility with the new code format. the technology upgrade is crucial to ensure a seamless transition for merchants and consumers using the platform. On top of that, I believe the M Financial must ensure that the unified system integrates smoothly with existing merchant systems and payment processes that may require collaboration with third-party service providers, POS system vendors, and other stakeholders to ensure that the data exchange capability. Seamless integration is essential to minimize disruptions to merchants' operation and ensure a consistent user experience. And for the next question, I will pass to the Vinny.
Okay, so for the next question, right, in the case study, we are, we have been asked regarding the would open technology and technology as a service, TASS, service model work for N Financial in the long run. So for this question, we need to look how this thing, TAS can affect in the long run. So in my opinion, I think that it can influence in the scalability and flexibility, also can influence in cost efficiency and risk management. So let's take a look on scalability first. So scalability can be referred, right? The company keep on growing. So when we talk about growing, since the company is growing, so the demand too. So the company grow, the demand also grow. So open technology is our key to the scaling efficiency. So it allow us to handle increasing the number of transactions and user without significant downtime and performance issue. This is where we can see the cloud computing comes into a play, right? So with cloud solution, we can then dynamically add resources to meet the demand and ensure the system remain responsive even during the peak usage period. So we don't want any traffic jam during when our customer is using our services. So this we can maintain about the quality of our product. So let's talk about flexibility. So when it comes to TASS model, okay, it can provide us with incredible flexibility, which can customize in financial services tailored to the business for all sizes and any sectors. This means that this product can be easily like spoken payment solution and risk management tool can fit into the needs of each business. Open technology also make us allow to rapidly deploy new services, update in this fast-paced market where customers need the regulatory and requirement system change rapidly. So that's about scalability and flexibility. So let's move to the cost efficiency. So cost efficiency is regarding the cost saving. So by utilizing the cloud-based service and open technology platform, we are able to reduce our capital expenditure and physical infrastructure. So this solution require less upfront investment compared to the traditional IT setup. So additionally, by automating this process, we can reduce the manual intervention, like human intervention in our services, which lower operational costs. So for example, automated loan processing, risk assessment streamline on operation, leading to cost saving and improved efficiency. So last but not least is about risk management. So everything now when it comes to more technology, it's all about risk. So by leveraging the data-driven decision making, we can more accurately assess the risk. So why? This is include the credit worthiness of the borrower. We want to make sure the customer have a good credit worthiness by using a comprehensive range of data, help to reduce the risk of default. Furthermore, the open technology platform enable real-time integration machine learning algorithm and to detect the prevent fraudulent. That's in my opinion. So I think that's about my opinion. So I'll pass to Husna maybe.
Okay, in my opinion, for an financial, they need to reimagine their traditional financial landscape of their business to remain viable in the long run. Okay, because for example, the bank is only able to serve few large scale of SME that have problems due to technology constraints. Okay, by reimagining the financial landscape, and financial can empower their open technology to run cost-effective business and lead to greater inclusion. Okay, next, an enterprise must sustain businesses' domestic growth by adopting the proven technology and practices of large enterprise into their business, so that this can lead to economic growth coupled with technological innovation that can boost the productivity of economic enterprise. Okay, then the point is international expansion. Okay, and financial can establish the market by international expansion, a move that can bring more benefits to their businesses. Okay, the foundational step for SME that are looking for international expansion is conducting comprehensive market research, which is to analyze the inner working of the business to certain readiness for an overseas abroad. Okay, how about you, Iqbal?
For my opinion, there are more pre-educational, which is innovation, basic strategy, and regulation. So for the innovation, the EAS model is to foster the economic system in the new technology, issuing the solution in the financial sector is adaptability in long-term problem. That is basic strategies, which is blockchain, AI, security, and Internet of time and cloud. This technology will help the support and support the needs of the financial institution. Example, for the blockchain, is can help the increase the security in the transaction. AI can handle the personalized the transaction, and the cloud will conduct and to save the process. Lastly, the regulation about the technology must improve and provide the best solution. This is because the regulation will help bank to protect from the risk they expect that faced by bank and to stabilize the financial environment security. That's all for me. Thank you.
Okay, so thank you guys for answering and addressing all the questions and answers for case study 1. And now we will move on to case study 2, which is about funding societies using fintech to support small businesses in Singapore. So I let the first presenter.
Okay, so I think I really like this case study because it can show that how AI can make a big impact toward the SME. So the first question in this case study is asking that as she planned for this year ahead, Yang wonder which segment that the SME market should focus on. So in my opinion, I think they have two, like small and medium. We have like micro and small enterprise. So why? Because we are able to see the okay, why micro enterprises? Because they are market potential. So let's take a look on the micro enterprises. So this business is about 80% of all enterprises, representing a large and influential market segment. Despite they're small individually, but collectively, they hold a significant economic influence. However, the problem is here is the micro enterprises are facing like struggle to access the traditional bank loan due to the sizes and lacking of credit history. So, so how we are going to help these micro enterprises? So in order we to help these micro enterprises is we can develop a develop loan products specifically designed to meet the short-term and small-scale financial need of the micro enterprises, such as microloan and quick turnaround financing. So we should invest in the educational initiative in order to inform the micro enterprise owner regarding the P2P lending, which is owner to owner, and how it can provide a fast and accessible funding solution compared to the traditional banking. So this is about micro enterprises. So let's talk about the small enterprises. So for small enterprises, these businesses are typically grown in a growth phase, which means that they have potential to move to the medium. Okay, requiring more substantial financial support to expand the operation, hire additional staff, enter the market. So these small medium really need the financing, not just from the traditional banking process, but more. So how we can help the small enterprises? So we need to have a strategy. So in order to attract small enterprises, we can offer like competitive interest rate and flexible long term to appeal to business seeking reliable on the scalable financial solutions. So we should positioning the funding society as growth partner by offering financial product to help this small product to manage their cash flow and capitalize on opportunity. So this is, I think this is the way we can help this micro and small enterprises. So I think I'll pass to our next presenter regarding which sector that should focus on.
Okay, in my opinion, Mrs. Young need to focus on more on retail and e-commerce business. Okay, why? Because Mrs. Young should identify specific segment of SME that are most inclined to borrow from the crowdfunding market. Okay, for instance, they could target retail businesses and e-commerce companies by understanding the unique needs and preferences of these segments. Funding societies can tailor their marketing strategies for retail business. For example, they can emphasizing quick access to capital for inventory or expansion might be more effective. Okay, beside that, for e-commerce companies, they need to highlight seamless digital process and competitive interest rate could be reasonable. Okay, by focusing on specific segment allows funding societies to build a competitive advantage over both peer-to-peer competitors to traditional banking. By addressing the pain points of retail and e-commerce SME, they can serve their target audience for better operations. Okay, so we move to next question.
Okay, let me explain about the second question for case study 2. Basically, for question 2, they ask about what competitive advantage should funding societies build. So I have some point here, which is number 1, customer education and trust building. Number 2, complementing bank services. And number 3, robust credit assessment. So I will explain for the point number one, which is customer education and trust building. Basically, funding societies should increase their efforts to educate potential customers, especially the older ones who might not be familiar with digital finance options, given the skepticism among SME owners. So, events, social media campaign, and PR campaign that highlight the advantages, safety with the regulation of peer-to-peer lending can help achieve this point lah. Okay, building credibility and trust can also be facilitated by the showcasing accomplishment and success stories. And about point number 2, complementing bank services. Okay, what I meant with this point is actually funding societies should market themselves as a complementary service that bridges the gap left by the traditional banking as opposite to going head to head with banks. Funding society are able to supply SMEs with the short-term loans that banks generally do not offer. This meeting their immediate financing needs. So these tactics actually makes use of their ability to offer prompt and adaptable funding options. And for number 3, robust credit assessments, which is reliability and accuracy in the credit risk assessment are essentially essentials to preserving investor confidence and reducing loan default. Okay, funding societies need to keep improving their models for evaluating credit worthiness and employ open techniques for classifying borrowers and determining interest rates. So this emphasis on risk management contributes to the developments of reliable and long-lasting lending platforms. So I explained about the question number 2, but the problem is I don't really understand the question number 3. So maybe I can pass this question number 3 to Iqbal to explain what I understand about this question about case study number 2.
Okay, thank you, Amani. For the question number 3, it's about the objective of the marketing communication, what should be. So there are 3 points. First is safety and security, brand positioning, and educational outreach. So for the safety and the security, the highlight is the safety and the durability of the P2P lending process. This will include the showcasing probability the credit model, emphasize the data analytics, and the international regulation that has the received. They also expect this aspect can help to to help the building trust and with the borrower and the investor. For next is the brand positioning. It will increase the visibility and the strong position in the market through the target campaigns, position funding society as a lending P2P lender in Singapore. This can increase the successful and awards to relative themselves from the competition. Lastly, for the educational outreach, this will develop the educational campaigns that to inform to the SME about the advantage of the P2P lending. So the SME can make a loan with the P2P using the P2P lending, especially for the who's not met the stringent requirements of the bank. This also addresses the complementary nature of their needs and services to commercial banking, as mentioned by Vijaya. So the objective aim to address the key challenge and the leverage of the funding society to make sure they have a strong position in the market and could attract to more users to use the platform. So for the last question, I will pass to Husna.
Okay, for the last question, should they compete directly with banks or should funding societies see themselves as playing a complementary role to banks? Okay, so just like Irwani and Iqbal has explained, I will elaborate more on that. So, in my opinion, here, funding societies should position themselves as a complementary player to banks rather than a direct competitor. This is because banks usually give loans to small and medium sized enterprises, SMEs, that have a good credit history and valuable assets to offer as a collateral. And they often offer them at lower interest rates. However, many SMEs, especially the newer and the smaller ones, struggle to get loans from banks because banks have a very strict requirements and they take a long time to approve the loans. And in contrast here, funding societies can use its peer-to-peer lending platform, just like how Irani and Iqbal just explained, in order to fill in these gaps. So a peer-to-peer lending platform is actually a way for people or businesses to borrow money directly from other individuals without going through the traditional bank. And the platform uses technology to match borrowers with lenders and handles all of the transactions. And this system often results in a faster loan approvals and can provide access to funds for those who might not qualify for bank loans. So here, funding societies can use advanced data analytics and machine learning in order to quickly and accurately check a borrower's credit worthiness, and this allows them to loans much more faster, as well as helping the SMEs that might not qualify for traditional bank loans. So I want to conclude here by offering a new financial solutions. Funding societies can work alongside banks in order to fill the gaps, and this approach will help to foster a collaborative financial ecosystem where both the traditional banks and the fintech companies like funding societies can thrive, ultimately supporting the broader SME sector in Singapore. So I will let Nurin to wrap up this question with her answer.
Thank you, Ayu. I do agree with all the points that you have shared. And I do also believe that funding societies should position themselves as playing a complementary role to banks rather than directly competing with them. As well, banks have their strength in offering long-term loans and serving certain segments of the market. Funding societies can cater to the needs of SMEs, as we have mentioned earlier. Funding societies should position themselves as complementary to banks rather than direct competitors because they can address specific market needs that traditional banks may not fully cater to. Small and medium enterprise, the SMEs, of, often face challenges in accessing loans from banks due to the factors such as limited business records or lack of established credit history. By this, we can addressing funding gaps as by focusing on serving SMEs that may not qualify for traditional bank loans due to the stringent requirements or limited credit history. Funding societies can fill a crucial funding gap in the market, provide a viable financing options for the SMEs that may not qualify for traditional bank loans, as we know that rather than competing head to head with banks for the same customers, the company can target underserved segments and provide alternative financing solutions. This approach allow the funding societies to serve a niche segment of the market that is underserved by traditional financial institutions, thereby promoting financial inclusion and supporting the growth of the SMEs in Singapore. Mm, In conclusion, by completing the services offered by banks and addressing the specific needs of SMEs with alternative financial solutions, funding societies can play a valuable role in the financial ecosystem, contributing to the overall economic development and sustainability of the SMEs in the Singapore. For the next presenter, I would like to pass to Rusna.
So I think that is all for today's discussion. Thank you so much, everyone, for joining our discussion today and giving your answer for each questions. So I think that is all from for today. So I guess I will see you guys again soon. Thank you and bye.
Bye.
Thank you.
Stop recording.